Welcome back to the Rational Millennial. I'm your host, Michael Lindner. We got a lot to cover today, folks. There's so much going on in the market. Got a lot to talk about here. Three topics I want to cover from the start. I'm going to keep this video nice and brief. Frenzy in the market. Stuff's going to the moon. Stuff's tanking. We got Tesla coming down really off all-time highs. I'm going to talk about more on that trade potentially and how to make a little bit of money here as Tesla continues to pull back. Talk about Gamestop, what's going on there, AMC, Blackberry, Nokia. I'm going to talk about those a little bit as well. I got some Sons of Scotland playing on here in the background. Just a little shout out to all the little guys out there that are moving the markets here. We got some pull, even though the big wigs at the top, they kind of want to keep us down. So Sons of Scotland, shout out to one of my favorite movies, Braveheart there. So also the last thing I do want to cover is Robinhood. I have a video I talked about maybe 2 weeks ago about why Robinhood is not the answer for your equity and options trades moving forward, and why now might be a good time to move that account out if you still have money there currently. So, lot to cover. Appreciate your time. Again, the Rational Millennial. This video is for entertainment purposes only. If you like what you hear and you want to hear more, again, much more content to come, just hit that subscribe button and the like as well. Really appreciate it. All right, so this is the first topic I wanted to cover with you all today, which is diving a little bit deeper into some of the Tesla figures that came out recently. They just reported earnings towards the middle of this week. The numbers were great. The revenue number that they hit, they beat on revenue. I believe they beat on earnings as well. They had their deliveries were fantastic for the quarter. They had another profitable quarter, which is really what the analysts look for here. So, again, I want to talk to you more about why there's been a sell-off, even though they had a great earnings report. So let's dive in. I'm on my page where I typically go to for stock research, which is tradingview.com. Again, I have Tesla loaded in here. We'll pull this up again just to kind of make sure that everything is all set. And the view that I'm looking at right now is the relative strength index, right? So a lot of day traders will use this. It's a great an indicator typically for, performance. If you take a look at some of the numbers that I'm going to run through you can kind of justify them for yourself. But anytime an RSI is trading is above that 60 to 60 range, typically means the stock is overbought, right? So you'll see a lot of times when it hits 80, 70, 80, you'll see a nice little pullback in Tesla. And then just on the reverse, the low end of this chart is anything under the 35 or 40 range, typically means it's oversold, and that's a good time to buy. So this is one of the indicators I use when I'm looking at potentially adding to my Tesla position. I also will take a look at the estimated moving average, right? So here we have our 20-day estimated moving average. If you look back, let's say over a 6-month period, another thing for the EMA is if the stock price, which is in blue, dips below the red line, it does mean that it is typically a good time to buy. So, again, here, got way up above the red line, comes back down below, has a nice run down. And then if you bought down here, way below the moving average, you had a nice run up. Again, that line is up above it. People will sell. Dips below, you can buy in. So anybody who's day trading or let's say weekly trading, this is a good indicator typically, again, is that moving average number. So that's one. Again, back to the RSI here, pull up this chart. I usually look back about 3 months, just because for me, it's a good figure. I mean, you can even go back a year. And if you take a look at the year, a lot of times when you see that number, like here's a peak right here at 83 for the RSI. If you look, the stock peaked. It was at 485. Then there was a sharp sell-off, came back down to 320, 325, 330. the RSI goes low, it was in the 40s. That's a good buying indicator. And then the stock was kind of flat for a little bit. If you look at the RSI, relatively flat. Here you had it again, bottom out in the low, the low 40s here, good buying opportunity. Then you have this massive run up where everything, if you look at the chart again, it's up into the low 80s again, way up here in the 880 per share range. So that's an indicator that I noticed. I saw, once it was trading in the high 800s, I am long the stock again. So I hold it. I don't want to sell my positions. I want to hold Tesla for hopefully a really long time. But this is a nice way to generate some income off of your current holdings. So what I did when I saw it trading up around 850, 900, and I saw this RSI again, I used the 3-month. When I saw it pretty high up here in the mid to low 80 number again, I said, let me sell a call option, right? So I sold a call. I was guessing at the price. I just had a hunch. It wasn't anything. It didn't get a tip from Wall Street. I don't have anybody that works for Tesla telling me, oh, you should, sell the stock or buy the stock. This was just a tip for me. I went ahead, I sold some call options, generated a little bit of income. I put them through with a strike price of 850. And sure enough, it dipped down. Now we're in the 780s. And if you look, we're down at least in terms of this RSI indicators, we're down in like the mid 20s. So if you don't have Tesla, you don't own it, might be a good time to buy it. If you do currently own it, might be a good time to add to that position here as we move forward. So again, took a look at some of the EMA figures, took a look at the RSI. And next, again, I'm going to jump into my next topic, which is we'll be covering Robinhood, what happened there with the trading app, and then AMC, covering AMC stock and Gamestop. Second topic I wanted to cover with you guys here today. Again, I know I just talked about Tesla, gave you some tips on how to trade that here moving forward. Next thing I want to talk about again is Robinhood. Here we go. So again, a previous video that I recorded about 2 or 3 weeks back about why I don't personally like Robinhood. I have a couple of friends who are on it. They've also said that it's a joke. The app is a joke. The company is a joke. There were multiple trading days in 2020 in March when things were absolutely tanking, right? The market was going down, some days 1,000 points, 1,500 points or more, and you couldn't even access your account. Their app was down. Oh, sorry, we're closed for trading. It's ridiculous. So they have those issues. The second issue that I discussed was, again, they let basically anyone and everyone open an account, even to trade options. There should be a little bit of due diligence that's done on the apps or the company side that says, okay, wow, you're 18 years old. You've never worked in finance before. You probably shouldn't be trading options, because if you don't understand them, you should not be trading them. They are very risky. They can put your account in a massive negative balance. And I personally very rarely trade options. When I see a lot of volatility in a company, or I get a hunch, or, I think that there's I'm looking at the RSI numbers and things are really overbought, and I think it's going to cool off. I will place a sell order. I'll sell a call, or I'll sell a put to generate a little bit of income from the account. So anyway, the restrictions on GameStop, they're using an excuse that it is due to tenfold increases in clearinghouse deposit requirements. What does that even mean? All it's really saying is they're giving an excuse as to why they weren't allowing regular folks like me and you to buy GameStop and AMC, and Nokia and Blackberry. It's a way to control the common folk, right? We were beating these bigwigs at their own game. They've been shorting, these hedge funds have been shorting these stocks for years. Shorting means you're betting that the stock's going to go down. You want it to go down. So they're driving the price down for years. Again, I'm not saying they're great companies, right? Like AMC, GameStop, not good companies. They're brick and mortar. They're outdated business models. They don't generate a lot of cash flow. Their earnings are not good. Their profits are basically negative. These are companies that, in my opinion, were almost out of business. And I am not long AMC or GameStop or Blackberry. But I want to tell you a trade that I did place this week, actually 2 trades that I made a little bit of money on. So here's their reasoning for it. It was not because we wanted to stop people from buying the stocks. Actually, it is. Whatever they tell you is not what they were doing, is exactly what they were doing. So just like politicians out there, whatever they say behind the scenes, they're doing the opposite. So it's not about them not having enough money. It's not about them saying they needed to limit the buying because of the volatile securities to ensure they could comfortably meet their requirements. Well, you know what? That's not our fault. Like, if you guys don't, if Robinhood, if you don't have enough cash available to close out positions, that shouldn't be your customers. That's not their problem. So again, look, if you see here, they're now allowing clients to buy only a single share of GameStop. A total of 50 securities are now restricted on the stock trading app. That's absurd. My opinion, get your money out as fast as you can. Move on. You can do an in-kind transfer. You don't have to sell all your stock. You don't have to sell your mutual funds. You can do an in-kind transfer to, let's say, a MerrillEdge.com or a Fidelity.com or a Schwab. And I highly recommend that. So that's, again, just a little bit of a tip, again, going back on my video about Robinhood. Finally, what I wanted to talk about was how I have been trading AMC and GameStop and Blackberry this week. If you're someone who's gotten in on the action, please let me know. I'd love to hear your take on it, how it worked out for you. But if you take a look at the charts here, I'll start with GameStop. Earlier last week, it's like a joke looking at this, but earlier last week it was at 85, 88 bucks. It skyrocketed all the way in the middle of the week to about a little over 500 a share. And then it tanked. So I believe this was on Thursday, I saw this thing running up massively. And once I saw it above 450, I said, okay, this can't hold. There's no way that this continued to happen without pulling back. So, and I am not long the stock, like I said. So to not get super risky without having to buy the stock, I sold call options. So I bought 5 contracts. Selling a call, you're betting that the stock is going to go down. I just threw out a strike price there of I put in at 400, and this was when it was trading again at like 475, 460. Put it in at 400. It cost a good bit of money here, but you can see it came all the way down to 265, 250, and then actually even later in the day, it was all the way down at 180, 170. So when I saw it run up really high here in the 400s, I put that through, and I exercised that option, and I made a little bit of money here. Again, just to generate some cash flow. This isn't about, making $48 million like the guy up in Boston who, basically was the reason that this stock went to the moon. And because he was posting on Reddit and all these other sites, he had videos for years about, why you should be buying GameStop and why they're oversold. And I'm not trying to make, $40 million in a week or in a couple of months. This was just something, again, to generate some cash flow. If you're super risky and you got in the 30s or the 20s, you threw a couple $1,000s in, that is excellent. I did not do that. So I'm not going to, sit here and claim that I'm, some genius guru investor that takes massive risks every single day of my life. I'm not, but I was able to generate some cash flow there. And then on AMC, I actually did the opposite. I saw at the beginning of the week that it was trading around $4, but it had made already a nice run up because this actually a month ago was a $2 stock. So, and this has been on my tracker for a long time. I'm a big fan of movie theaters. I love AMC. I wish, everything was back to normal and everybody was able to go to the movies, but unfortunately it's not. So they're not doing well. Sure, a lot of them across the country are really begging for business. But when I saw it trade up at about $4, $5, and then the next day, I saw it really pop in early trading hours. It just absolutely massive run up in trading. I went ahead and I sold a put option. So I had a feeling once it was already at about $6-7 that we were going to have a nice run up. So I put through a put option trade, and it did. It continued to run. You see here, I think I put it through when it was trading at about $9, $10, and it went all the way up to about $20 to close out that day, 19 and change. Selling a put option, you are betting that the stock is going to go up. So was able to generate, again, some income from that trade as well. If you do not understand options, I'll say it again, I highly recommend staying away from them, just buying the stock outright if you have cash. And if you don't have enough cash to buy the amount of shares that you have, maybe look elsewhere to generate some returns in your portfolio. So those are just, again, a couple of tips. What will I will be watching it again this week. I will also be tracking it here in my on my site on tradingview.com. I'll be going in and entering all of I'll be looking at the RSI figures and the moving averages. And if I see that there's more opportunity, again, there's going to be high volatility, I'm going to try to take advantage of that. So if you have any tips, anything that you've been looking at, some stocks that you really like, I haven't really touched Blackberry or Nokia yet. I got some tips that they could be making big moves here moving forward. Novavax actually is something that has been on my radar for a long time. I bought call options on that a couple of months ago. That really had a great a fantastic week. Actually, it was up big numbers. So this is another one that's on my radar again for a potential pullback. If you take a look here, just on Friday, it was up 65%. This thing had a massive day. This is a biopharmaceutical company that is going to be producing some of the vaccines for COVID-19. If you take a look, this was a $6 per share stock back in February of 2020. So unbelievable numbers here. I will keep you updated on everything that I am buying or selling. Again, look out for more videos coming next week. Anyway, Rational Millennial, thanks again for tuning in. Click subscribe here down below. If you liked the video, what you saw, give me a like as well, and I really appreciate it.